Khalid Abdulla, CEO Aeei. We've just come out of the meeting where your year-end figures were returned to the public. Shareholders meeting, general public and press were there. It was a huge success.
Yeah, thank you, Tony. As you know, it's been coming year on year, and I think we every year need to outperform the previous year. And I mean, again, for half year, because of our acquisitions and our growth of all our sectors in our business, I mean, we're able to show 150% return.
You know, that's a very difficult thing to maintain year upon year. And I know you had a 2020 vision. What does that become, 2030 now?
Yeah, so 2020, it looks like we'll achieve whatever we want to, because we said we'll double our business by 2020. We'll double the assets, we'll double the profits, we'll double the revenue. It looks like we'll achieve that by 2018, 2019. So we've got to look the next step now to 2030 even now. And I think it's exciting times. And I think we're fortunate that we're growing against all odds. I think other companies, I've had lots of calls for other CEOs saying they managed to grow by 5, 10, 50%. But you know, they look up to us and want to know what we do differently to achieve these kind of growth figures in this industry.
What do you do differently? Because I'm curious to know that one.
Yeah, look, we've just stuck to the basics, I think, and ethically we kind of drive our business fully and strongly. We've put our clear visions, the whole group, the executives are all aligned, they all focused on what they're trying to achieve. Having said that, we've done some good acquisitions, we've grown the business, our sectors, the market understands our growth areas of our group. And as long as you do the basics right, and I think organically we've grown by 10, 15, 20% year on year. And some of the acquisitions have been just excellent acquisitions and bedded down quite nicely.
Talking about acquisition, did you learn a lesson years ago about making acquisitions, and that's paid off now?
Yeah, so our acquisitions these times, I mean, we built our brands quite strong. We're the top PE company, all those things, they got some value. And how we leverage off those things is be able to negotiate better deals, you know, with our potential target customers and target companies we're trying to acquire. And we look at the payback period. And I mean, generally 3 to 5 year payback period is the right thing, because cash is king in this business. It's one point having book entries and otherwise, but cash is king. And hence we're able to pay dividends to our shareholders as well, you know.
Let's talk about the portfolio, because it's very diverse. There's all sorts of different businesses involved here, yeah, and different markets. How do you handle the diversification?
So diversification is, I mean, a textbook 101 will say to don't put all your eggs in one basket. Your mother would have told you that too. So for us, the diversification model worked. It's diversified, but it's also focused. Each of our sectors have a CEO that runs the businesses and focus on this area. From my perspective, I look at the 80-20 principle, where I need to spend more of my time in those areas. Having said that, each of those businesses have been complementing each other. Sometimes the one doesn't perform, but the others complement it and kind of lifts the results. So on the 80-20 principle, we're performing 60-70% growth year on year, which I think is excellent for the model.
In certain areas, you've got an extreme investment in R&D.
Yeah, so we also, with all the profits we're making, you have to invest in the long-term future. So we're a medium to long-term share. We're medium to long-term business. The management have been in the system for a long time. So we're not here to make short-term decisions. And one area of a business is R&D, and we're hoping to unlock some value down the line. So you have to find the balance between R&D, profitability, dividends, short-term and long-term gains as well. You know, and I think that's what diversification works.
How does that apply to greenfields?
Greenfields, look, initially, right at the beginning, Aeei and Sekunjalo used to be a lot in greenfields. But the time and effort spent in greenfields is a bit tough, and that the return on time spent on greenfields compared to existing businesses, sometimes you don't see the value of it. So what we'll do on greenfields, if it complements one of our other existing businesses, we'll get into it. Otherwise, we'll try and move away from greenfields, because it takes capital and time. It's not so much the capital investment, but the time of management in a small start-up greenfields into growth. However, there's strategic areas of greenfields which we believe in future will be high net worth or otherwise, and that's the areas we'll go into.
Amongst your diversification of companies, are you talking about actually creating an internal sweetheart deal amongst each other?
Not really. I mean, what we've done, we've got those 5 sectors. As you know, we've got the fishing, the IT, the health and biotech. We've got events and tourism, and then we've got the strategic arm where we own 30% of British Telecoms, 25+% of Saab and Defence, Senior Finance Services, and Pioneer. So it's all very strategic and diversified but complementary businesses. One of the ways to unlock those values is to list the investments separately once they've grown. So hence we've listed the fishing business a few months ago, and that's unlocked value, and it speaks to maturity of the business. The next one to list now is the IT, and hence that's the way they complement each other in the way that we capital raise and we nurture them from small businesses up to multinationals. We list them off separately, and then creates the maturity in the business.
What is very interesting is that the multinationals that are involved, British Telecoms and so on. Why did you get involved in that area, and what made you go outside of the South African market?
So multinationals obviously is a key growth area for us. As you know, a lot of international companies come and they want to understand this African model. Africa is a very different place. Africa is going to have 2 billion people on the continent. We see value in some of those places earlier on. For example, when we bought British Telecoms for 27 million 7-8 years ago, we saw the future of it growing to Africa. That business pays us about 15 million plus dividends per year. So you can see the kind of returns. It takes time and effort to kind of walk the corridors and to assist them with the policies of how Africa works and to grow into Africa. Other multinationals are talking to us. Saab Grundig Defence, for example, it's the second biggest subsidiary of Saab outside of Sweden. And it's the top exporter in South Africa for the last 3 years. And 80% of their revenue comes from overseas, including India, Brazil, etc., as well as in Africa. So that's the area of growth.
Do you see more and more multinationals offering large shareholdings because of the situation in Africa and wanting to keep hold of the local market and understand it, and therefore needing the expertise that you offer?
Yeah, absolutely. So we believe we understand the South African market well, the policies of government and where they want to go, as well as in Africa. And also the BEE codes, the fact that we're the number 1 BEE company, and we listed our ethics, our governance is up there with the best. In fact, as you know, we're in the top 10 for governance, we're in the top 3 performing financially. And to find that balance between a top BEE company and performance and adding value to partners is important. The BEE policies has helped us as well, because these international companies come in and they have to transform. And that's an opportunity for us. But because of our track record with some of our other multinationals, we believe that we could get some further opportunities.
I notice you modestly leave out one award that you've had, and that's the fact that you were Businessman of the Year.
Yeah, look, the Businessman of the Year, it was a surprise to me. I knew I was shortlisted in the top 3 or 5. But it's a wonderful award. But I must say it's testament to the management team around me. It's not just for me. But one thing I do know, that from my sporting background, I always learned about working with people and how to extract the most out of people. And people tend to believe now that they want to do things for me rather than having to do things for me. It's a very different way of doing things. And because of that, I think it was nice to see that at least the recognition has come through for myself, but also for the group. I think it's important, and for my team.
We talk about the BEE involvement, which is very important for the future of this country, but how much of a rainbow company are you?
We've got, we've got over 3,000-4,000 shareholders, so it's quite it's quite widely spread. I think we are a complete rainbow nation and a rainbow shareholding structure. However, because of the nature of our business and the tough times we've had, I think 90% of the business is owned by about 20 people or 20 institutions. It's historic, maybe the people didn't believe it, but it's growing, and also it's becoming more spread now. Hence our separate listing of the fishing and IT to increase that spread as well, which should be a lot more representative of South Africa.
A lot of people say that your shareholding, your share price, is too low for its value. So if one were to be realistic about the overall value of Aeei, what would it be, and what do you feel the share price should be?
Look, we've done a model, and we've tested it. Our share price is sitting just under 4 rand. We did a sum of the parts as well as a separate PE evaluation. On a PE and a multiple of 15, we should be sitting at 6.60 to 7 rand a share. On the sum of the parts, which is used by some of the multinationals for the unlocking of each of the subsidiaries, they should be sitting at 8 rand per share. So we believe that our share is still relatively underpriced, but you know the market is there, and obviously the fact that we're paying dividends now also shows that you know the share should be a lot higher.
And the total value of the business, the entire AEI?
Yeah, our market cap currently is sitting at about just under 2 billion, and I think our true value should be 4 or 5 billion already. And I think the market's starting to understand it, and hence we've grown the business from a 300 million rand market cap 4 years ago to almost 2 billion now. So it's grown, as one of the financial analysts would say, he said it's a 10-bagger. It's grown tenfold this year, you know, and I think there's still more prospects for us to come, because I believe it's quite bright for us.
And dividends for shareholders in the future?
So we've paid, in the last 6 months, we've declared and paying a dividend of just over 5 cents. And I think as for shareholders, you know, once you start paying a dividend, you want to make sure it's up by at least 20-30%. So I think our shareholders can expect that there'll be a decent growth of about 20% going forward. So if you think about it, you get some good solid dividends going forward.
That came out at the shareholders meeting we've just left. They were very keen, some of your shareholders, to know what their dividends might be in the future and how long they must hold on to those shares. So what would you advise?
Well, I mean, I obviously can't tell you to buy or sell shares, but you know, from my perspective, I'm a sizable investor in Aeei. I believe in the business. I believe there's good growth coming, and I've told the market. I mean, it's public knowledge when we present to the IAS. The IAS believes in it. Even perception is one thing. PE companies are still discounted for whatever reason, but I'm bullish about this business, and I think we are going to go places with our plans.
Everybody always says this is the final question, but it really is. What's lined up? What acquisitions? Not that you can tell me in depth, but roughly.
No, so we've planned 2020. We're very focused on 2020. We may achieve it earlier, but as I said, we said we're going to list our fishing business. We did it. It was in our books at 300 million. It's capital. It's realized the value of 1.2. Our IT business next. We should be getting to a valuation close to 5 billion before we list it. So between 12 and 18 months, I think we're on track. And obviously finding more value. But if you look at that two alone, you can see that there's a lot more prospects. We're looking for acquisitions. We're getting a lot more deal flow. Our credibility is up there. The perception on Aeei is up there. Our market, our brand is built in the market. People kind of understand who we are. They're clear on what we do. Our strategies are clear. And we think that going forward, there's some exciting stuff coming.
Khalid Abdulla, may the markets be with you.
Thanks, Tony.